Hey, what is up guys, and welcome back to another Your Average Trader Trading Made Simple video. Shout out to everyone that's been watching my videos, liking and sharing. It means a lot to me and I'm glad that you guys are finding some value in my videos. Today I got another nice and short video for you guys because you know that's the way we like it. Today's video is inspired by one of my students as she was having a little difficulty in keeping her trading simple. So I figured why not make a video to help her and help you guys at the same time. So we are going to talk about how to get better setups by making your trading simple as possible. Whenever I have a one-on-one session with my clients, I always look forward to the part where they show me how they mark up their charts, because I'm always curious as to what is going through their mind as they analyze the charts, and most times it reminds me of how I used to spend hours upon hours analyzing my own charts, and it makes me appreciate my journey so much more. Having observed my clients, here are a few things to consider when you're analyzing the charts to get better setups. The first thing is limiting the amount of factors affecting your decision-making process. I remember when my charts were laden with indicators upon indicators and I was relying on everything but price action to give me trade setups. Having so many elements and indicators usually led to sheer confusion and me not being able to take any trades at all. Once I got fed up with so many factors in my decision-making process, I took a systematic approach to making my trading as simple as possible by limiting the amount of factors that affect whether I take a trade or not, and by focusing mainly on price action. Imagine this: you are at a four-way intersection and the stoplight is indicating red and green at the same time. If you were at this intersection, what would you do? Well, you would most likely do nothing as you were getting mixed signals, correct? It's the same exact thing when it comes to making trading decisions and having multiple indicators to consider. One might be giving a sell signal and the other might be saying something else. Limiting the amount of factors to consider is one of the ways to make your trading simple without the unnecessary confusion. The second thing you can do to get better setups is to stop over analyzing the charts. I sat and I watched someone analyze a chart for 20 minutes only to end up being confused at the end and not being able to find any setups. One of my mentors once told me that if I can't determine what the market is doing within the first 2 minutes of looking at the chart, then I don't know what I'm doing. And oh boy, that one really hit a nerve. I took that personally because I used to put hours into hours on the charts, analyzing what could possibly happen next, and to hear this man say, I don't know what I'm doing, really hurt my feelings. But here is a key takeaway from what he said. Studying the charts is very important, and spending hours backtesting is also important for you to fully understand how price moves and interacts with areas of price sensitivity. That is the only way you will develop over time a sort of intuition in the market where you can almost see and feel the plays before they happen. Also, him saying that let me know that I was spending too much time analyzing, if not over analyzing the chart in order to find trade setups. So the best way to get better setups and to make your trading as simple as possible is to stop over analyzing the market. You're probably over there asking me, but how, your average trader? And I'm going to show you. What you just saw was how majority of my clients came to me and how they analyze the charts, and for the most part nothing is wrong with that because they were practicing what they knew. You asked me how to stop over analyzing, and the simplest answer is to focus on the current price action. I see people spend far too much time on the higher time frames like the daily and the weekly time frames, drawing up and plotting unnecessary levels in the past, levels which have no immediate effect on the current price action. Looking left is important in order to identify possible areas of price sensitivities, but some people spend way too much time looking left. You need to narrow your trading range. Identify the most recent daily highs and daily lows and trade within that range. Be honest with yourself. You are not a swing trader just yet, so you are not going to be taking 300 pip moves that you will be holding for a week or two. If your aim is to find intraday setups, then that's what you do. You look between the daily highs and daily lows. Once you narrow your trading range, you essentially narrow your focus, and anything outside of your range is not a current factor in your trading decision, and the only thing left to do is to determine the overall trend and to find an entry. So in this example here, we have narrowed down our trading range into a 215 pip range, well 214 pip. So now all we are interested in is finding setups within this daily high and this daily low. We don't care about anything outside of the range. We have already established that the market is moving down, giving us lower lows and lower highs, so we will be looking for buy setups in this range up to the ceiling, and then possible sells from the ceiling down to the most recent price floor or even further down. So once we've narrowed our range, now we drop down to the 4-hour and we start to look for possible moves. Simple as that. So we see that price wants to move up now. We could possibly take a buy here, risk to reward, and we could see what happens. So we know that this red line from the higher time frame is the daily price ceiling, so we would expect price to reject from here, or we'd be looking to take sells from this level. Simple as that. What you have done is you have narrowed down your trading range into a 215 pip range, and then you found setups within that range, 120 pip each, one here, one here, two setups, and all you did was identify a range, and that's it. Nothing to the left matters at this point. It's only what's in the range here. So narrow your range. It seems simple, but it might be difficult at first, so you need to practice and implement this in your approach to the market, and I guarantee you start to find better setups in the market in no time. If you are interested in doing a one-on-one session with me, then you can schedule your appointment using the book now button on my Instagram page, and if you haven't followed me on IG yet, then you know what to do. Drop a like, subscribe, and share. Link to my free Telegram group is in the description, and I've finally completed the VIX Ultimate Guide, an introduction to trading volatility indices. So if you want a copy of that, then slide into my DMs and make it happen. That's it for me, guys. I'll catch you in the next one. Your average trader, I'm out.